Our next story is from China. Has its growth story hit a roadblock? I don't ask this question without reason. According to reports, China's economic growth has missed forecast in the second quarter of the year. This has added to worries that the country might need additional support for its tepid recovery. If we speak of numbers, China grew at a 6.3% annual pace in the April to June quarter. This is much slower than the 7+ growth which analysts had forecast given the anemic pace of activity the year before. Now, if we speak of unemployment, it rose to a record 21.3%, especially among the youth aged 16 to 24 years. This is slightly up from the 20.8% rate of unemployment which was recorded the month before. Let's talk about investment in property development, which is a vital driver of both industrial and consumer demand. It sank 7.9% in the first half of the year compared to a year earlier. Analysts say this is a troubling sign of persisting weakness in the industry. And naturally, this has set an alarming trend. Official data shows that the value of newly constructed commercial residential buildings continue to decline in almost all of the 70 largest cities in China. Those in Shenzhen, a major city abutting Hong Kong in the south, were down more than 5% over the January-June period compared with a year earlier. And immediately after these numbers were made public, China's benchmark CSI 300 index of stocks was down 1.1% as of the midday break, leading losses in Asia. It was the index's first decline in nearly 3 sessions. The onshore yuan weakened 0.4% at 7.17 per dollar just after noon, while the yield on 10-year government bonds edged slightly over to 2.64%. Now remember, over the past 3 decades, China's growth has underpinned the global economy, providing a generation of new demand, trailing only the United States when it comes to size. China's economy underpins prices for many commodities. It is also the source of an increasingly sophisticated array of goods, from electric vehicles to aircraft and renewable energy plants. So weaker demand at home may result in more of those products being exported. But will that help the Chinese economy? Well, only time will tell. Here's what I think. These moderate growth numbers are likely to stoke expectations of further government efforts to stimulate the economy, to ensure a 5% growth target is reached for 2023. The central bank in China has already lowered borrowing rates several times in a bid to shore up demand, in an economy where inflation has largely evaporated. In contrast to many other parts of the world, similar policy measures are likely to be announced after the Politburo meeting, including population and fiscal policies. So in a nutshell, China is going to take these numbers as a matter of embarrassment for its global image. Expect some major policy reform in the days ahead, and we, of course, will continue to track the story. WION World is now available in your country. Download the app now and get all the news updates on the move.